Maybe I'll tweet the video out because it's nuts. I was telling Fonz, like I've had seven commercial dryers running nonstop since Friday in my house. I shudder at the thought of what my bill is going to be next month for electricity.
I'm telling you, I'll take the under on the bill for the work though. It looks like a crazy sort of job, like rebuilding walls and stuff.
Yeah.
But like they have the tools.
Fucking homes, man.
Anyway, that's crazy. Are you guys like uncomfortable? Are you like able to like sleep and the baby's okay?
No, it's fine. It's just like it's sort of like a loud white noise. You know what I mean? It's just a very loud white noise. Anyway,
yeah.
Let's.
You don't have to go to a hotel or anything, though.
Nah, I guess we could have, but yeah. All right, let's start this up.
We have no JC today, or we have a JC?
We do have JC. He's not physically here with us, but spiritually he's here with us, and he's joining us in a minute or so. So let's just start up, whatever.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
All right. Good morning, everybody. Happy Monday. This is the morning show on Stock Market TV. I'm Spencer. That was Steve. We have Alfonso backstage. We have JC hopping in momentarily. We got a lot going on. We're in a fast market here. Steve has stuff going on. I got stuff going on. We got a lot of stuff going on today, but we got a lot to discuss as far as markets are concerned. You don't watch the show to hear about our lives, or maybe you do a little bit, but it's mostly about our charts. So let's bring the charts up. We got a lot going on. We got crypto, doing crypto things. Maybe we'll talk about the dollar. I don't know. I'm not really sure where we're going to go today. But Jeff Mackey is our guest, and Jeff has been working behind the scenes for several weeks now on a whole new suite of, I guess you could call them custom indexes / portfolios that he's constructing that are going to go out for his members, but he's also going to share a few with the broader public today, I hope, or this week. He's got a lot. This is like Super Bowl week for Jeff. Okay, it is not just retail earnings season. It is the retail earnings season before the official start of the holiday shopping season, which for Jeff apparently that starts in September. So plus you got the trade war stuff happening. So Jeff is like locked in. Jeff has a lot of things on his mind. So he'll join us at like 9:00. We'll have Kenny Glick stop by. If you missed Kenny's Saturday class this past weekend, you missed a banger. It was awesome. Kenny was on for like over 3 hours on Saturday, just ripping through charts, talking through VWAP setups, and it was wonderful. I was there the whole time. It was great. If you're a member of Hit the Bid, just go to your membership area on the site. It's called Hit the Bid 101. If you're not a member of Hit the Bid, join, and you can get access to all his classes for free when you join. We'll have Jason Purr stop by later on today as well, and that is that's the plan. So let's bring on the guys, start the show up, and see where it takes us. Smash the like, always. Thank you.
Good morning, Mr.
Right.
Spencer.
What's going on, Steve? You're messaging me about Japan this morning?
Nope. That was not me.
That wasn't you. That was Alfonso?
Alfonso is messaging everyone about Japan.
Oh,
he's very excited.
I did not realize Japan was at all-time highs. Sorry, Fonz. My mistake.
It's a big deal. It's a monster base. Are you aware that this is the biggest base of all the bases?
Yeah, we've talked about this base for a year and a half.
Long time. So, that's right. That's right.
Yeah, I'm aware that we are.
We haven't been here really since, I guess, late night December 1980. Do you remember December of 1989, Spencer?
I was not even a twinkle in my parents' eye.
Wow. I was 1 year old. and I remember it well. But that's the last time the Nikkei was here, around 40,000, and we're breaking out right here this month. Really
Congratulations to all the buy and hold investors who bought and hold and held.
We're so back.
Congrats to you. You earned it. You know, I was one of those people when this first came up like a year and a half ago. I was like, there's not any real price memory from 30 odd years ago, 35 years ago, 36 years ago, whenever it was. But it took a while, but clearly there was something of significance there because it bounced all up in that area for a while. But now that's the thing of the past. It's over, Steve. We're past it. It's done.
Price memory is a hell of a thing, and it's real. And a lot of people would say to you, that's 35 years ago. It doesn't matter. I disagree. And you can see how price ran right up to this level several years ago, paused, started consolidating, digesting the gains of the years before, and is now finally getting it done. But this has been a long consolidation at this level for Japan. So I think there's enough like fuel in the tank to make this a valid breakout for sure. We've been consolidating at this level since really January, February of 2021 for Japan. So
nice.
Really good stuff from overseas equities. That continues. It's been the case just about all year, but breadth remains strong. Participation continues to build. We're getting breakouts from these massive bases in developed markets, and emerging markets are slowly joining the party as well. I know we talked a lot about China last week. Had a big pop on Wednesday, like the FXI, the China Large Cap Index.
And then what happened Thursday, Steve?
3% looked like a breakaway gap. I was like, okay, we're going to complete this base. We got excited again, and then we gave it all back. If you look at something like BABA, big pop, looked like we were breaking out, gave it all back over the course of the next 2 days. Let's see if that was just a false start and we can get a valid breakout in the books from some of these Chinese indexes and Chinese mega caps this week. I think that'd be really constructive for the global equities trade.
We'll see, man.
He doesn't believe it. He's not a believer.
Baba's now my proxy for everything ex-US. So.
Well, hey, it's not a bad proxy. Like if you told me I need one emerging market bellwether stock, I'd probably give you BABA. Yeah, so that's pretty good, Spencer.
We got one JC Parets.
What do we have to do to convince Spencer Israel to get involved in some Baidu too? How are you
come
feeling
on
about your current China exposure? Are you ready for another
one?
Come on,
I can't handle more of this. I can't handle more. We got JC in the house.
We'll keep working.
Let's bring him out. JC, what's going on? Where are you? What the hell? What's going on, man?
So JC's a guest now. You're a guest now.
He's a guest on his own
show. It's nice to be a guest sometimes. I don't always have to host everything. You know? Dude, all I do is cooking constantly. It's nice to go somewhere they cook for you. You know, it's nice to be a guest.
Did you go somewhere where they cooked for you this weekend? Is being cooked for on your mind?
Nobody cooked. I do all the cooking, man. And I like it. It's nice. Okay. I like to do cooking.
You're not upset about it? This isn't like a passive aggressive comment about the fact that no one's cooking for you?
No, I mean, listen, I like to play it both ways. Like, listen, I like to make good meals. I like to, I'm passionate about that, as you guys know. And then when I go to somebody else's place and they're equally as passionate, I appreciate that. Like game recognized game, you know what I'm saying?
Now, how often do you find yourself in that situation where, and probably happens to you when you go out to eat too, where it's just, you're annoyed that you're not the one cooking?
Yeah, it happens.
Yeah.
It's not an ideal situation. Especially if the food isn't good. But like when I'm at Abuela's house, Abuela's house is money, dude. You went to my grandmother's, right? Didn't you come?
She made us the ropa vieja, right?
She made the ropa vieja. Yeah, just an Abuela classic move right there.
So good. Yeah, we did go. That was
anyway, JC, we have not done the state of the markets yet. We're waiting for you.
It's not the same when we state the markets without you, pancakes.
You like the pancakes?
I do. It's good.
Yeah, you would like the pancakes.
Matches my shirt today. Hey, shout out Powder Blues.
I just want to give a shout out to New York City. Great town. You guys should go.
Great American city.
It is fantastic.
Oh, how was your city weekend trip? Was it lovely?
Great. Central Park is what a park that is. Central Park.
You had great weather.
Yeah, it was hot.
Yeah.
You know,
Dude,
but
it was
you
hot.
know,
It was hot
Northeast stuff.
yesterday. Yeah.
I'm having some difficulty, so I'll let you guys do the rundown, and then you guys can tell me what's going on. How's that?
Okay.
What's going on? All right. Oh, here we'll tell you.
Shall we?
All right.
I actually do got
bottom, there's a lot of red on my screen. That's the bottom line. Okay. Crypto, actually, it's pretty mixed, right? So in no particular order, because my screen is not in JC's order, we can look at the S&P futures down 0.13%. Wow. NASDAQ down 0.18%. Russell's flat or up on the day, hanging in
Dow's
there.
flat.
We were up last night.
Dow's more or less unchanged, right? Crude up, crude and gold both up about 1/3%.
Silver
Dollar,
up almost a full percent.
what is?
Silver up almost a full percent.
That's
Copper
not
down a full
not on my
percent.
list. And then
Net
crypto in the red. A lot of international stuff down slightly.
Solana, massive underperformer.
Solana down 4.5% this morning. ETH down 3%. Cardano down 5%. Yeah.
That was the lowest weekly close for the Solana ETH ratio in over a year.
It was the lowest weekly close for the anything ETH ratio in over a year, by the way.
Okay. You get so defensive when I say facts about Solana.
Look at your face. You know what you did.
I do.
Listen.
Fun fact. Solana BTC did not make new lows. Actually closed at new 3-month highs for the Solana BTC ratio. For you Solana summer folks out there. I don't own any Solana. How about that? This is the first, like I sold about a month ago. I own 0.0 Solana, Mr.
Me too.
Butarski.
I sold mine to buy all my meme coins.
I think it's irresponsible, and it's like the first thing that I tell people when they ask me what to do these days.
You tell them JC doesn't own any Solana?
I don't tell them that. Also, I'm getting like a lot of people who shouldn't be asking me about crypto are starting to ask me about crypto.
Really?
Yeah. Weird.
Right? Tell me more.
Strange.
Tell me more.
I'm getting questions, JC. You know?
So you get from normies or like your golfing
Normies.
buddies that like you like brainwashed?
No, like normies. Responsible people.
Yeah? Like your dad?
No.
All right. Because your
This is
dad
good
doesn't count either. Because your dad's
No,
an
no.
actual degen.
No, good data. It's good data.
All right.
So
I got something for you.
What?
I got something for you. Can you throw up the slide 2 there? Throw up slide 2. Steve Strazza is one to commonly argue that these are the most important stocks. Is that right?
That's right.
Strazza?
That's right.
These are the most important stocks. I'm more of a financials kind of guy when it comes to the most important stocks, but I respect it, Strazza. I respect it because you can't have any technology without chips, right? And technology is the largest sector in America. So this is a valid argument, not one that I make personally, but one that I respect.
This is probably the least popular, however, best from an information standpoint when it comes to semiconductor indexes. There's a lot of semiconductor indexes. Some of them are just the mega, or some of them are just the large cap US, and they'll X out Taiwan Semi and ASML. Other ones will do all the international. They'll market cap weight them, just the large caps. This one is large caps, but equal weighted. So it's all the most important chip makers, chip companies, semiconductor businesses, it's all the equipment stuff too, but then really equal weighted in a big broad basket. And a breakout to all-time highs in this ratio, like you're saying, JC, to me is as bullish, as risk on, as important for the broader market, as big of a confirming signal, right, for the new highs at the index level as anything out there.
So this is a great question and something that you and I have been talking about for a long time. And I don't know if you're right or I'm right, or I don't know what the right answer is, but let's go over the facts and then we'll let you guys in the audience, you guys weigh in. So we're going to do a little game here. And you guys tell us what you think based on all the evidence as to how to think about this particular group. You ready for some fun facts there, Mr. Steve Strazza?
Yeah, please.
Steve is a huge fan of fun facts, likes to wear whales on his shirt.
Hashtag fun facts.
Yep. So ready? Fun fact.
Mm-hmm.
You add up all of the semiconductors on planet Earth.
You do.
And the total market capitalization is? Guess. Don't look.
I'm not looking. I could easily look.
Every semi stock on Earth.
What's the total stock market? Give me total stock market.
Total stock market in the world, like 130, 125, something like that.
Add up every
semis are 20,
25. Oh.
20.
8.6.
Shit.
No.
NVIDIA
Bullshit.
is half of that.
Damn
Bullshit.
it. Way off.
8.6 trillion.
No, that's
Yes.
not right. Is that just large caps?
8.6 trillion.
Wait a minute.
Matter.
How
doesn't
big is
matter because your little small caps aren't going to make
Yeah, they don't matter.
How big is wait? How big is Broadcom?
A lot of semis though.
How big is Broadcom?
You would just let me finish my fun facts. You would have all of this data. Settle down. Settle down, guys. You guys are getting all riled up. You see what happens, guys? You talk about semis on a Monday morning. These guys are kids these days.
I can get to 6 or 7 trillion with 4 names.
Stop. Let me finish.
Yeah,
Jeez,
I guess
Louise.
Trillions a big number.
Math, JC. I think it's bad math, sir.
8.6 trillion
See my thing?
for all semiconductors. 8.6 trillion, all semis. NVIDIA is half of that at 4.3.
Right.
Number 2 and number 3, Broadcom's 1.4.
Yeah,
and Taiwan Semi is 1.2.
So that's three. That's 3 names right there.
3 names is over 7 trillion, representing over 80% of the entire market capitalization of all the semiconductors in the world.
See, this is great and it's mind-blowing to me. However,
if you guys wouldn't keep interrupting me, you wouldn't have all of this information.
I could have had it 2 minutes ago, but
he said it. That's a great fun fact.
So we'll say it again for those who couldn't see through all of the distractions from these 2 knuckleheads.
Now,
8.6 trillion total semi market cap all over the world. 8.6 trillion. NVIDIA is half of that. Another 1.4 and a 1.2, rounding out the big 3 with Broadcom and Taiwan Semi. That's $7 trillion in market cap, representing over 80% of all of the market capitalization of all of the semiconductors in the world. The reason I say this, my friends, is because now that you know that, which of these 2 charts is more important? Put up slide 2 and slide 3, where you've got the equally weighted semiconductor index, the S&P 500, just made new all-time highs on Friday. No. And then if you go to the next one, this is the market cap weighted semiconductor index. Shout out Jan Van Eck, wine snob just like me. Shout out Jan. And so the market cap weighted semiconductor index by Van Eck funds is also making new all-time highs. But here's the thing. What is the weighting of the big 3 in this ETF? 40%. Half of what it actually represents, which is also an interesting fun fact. And so you've got the market cap weighted semis making new all-time highs. You got the equally weighted semis making new all-time highs. And I just find it hard to agree that this is the better way to look at that sector. Chat, if you want to chime in, now's your time. Now that you have all of those fun facts and you have all the data, is this the more important one or is it this one?
Yeah, Fonz, can you just go back and forth quickly a few times so I can just kind of compare them? Thank you. Just do it a few more times. Thank you.
So the market cap weighted with all that NVIDIA and all that winning going on with Broadcom and all that stuff broke out at the beginning of last year above those late 21 highs. And if you go to the equally weighted, it's just trying to do that now.
So
what happens when your biggest semiconductor stock is like Crudo or some shit like that? What's the big one? It's called
CRDO.
Yeah, CRDO. That's the largest in the equally weighted as of right now.
JC, it depends on what you're trying to achieve. Are you trying
Crudo
to
technology? I've never heard of it in my life.
Hold on. It depends on what your objective is with the analysis. Are you trying to figure out what semiconductors as a group?
My point is that 3 companies represent 80% of the world.
I wanted to hear.
Is the equally weighted even relevant?
Yes, because there's information there about the breadth of the group. right? And that could be confirming confirming information for the strongest, biggest players in the group, which most people are invested in. So if you're using the analysis in that way, I would say XSD is more important, right? I do care about what the little ones are doing. I want the little ones doing well to confirm.
See, I don't think we
the
need to
action in
care
the big
about the
ones.
little ones. The little ones
However,
don't matter.
If you're trying to do the analysis in order to see how people who own semiconductors are doing in the market and are doing in their portfolios, yeah, you want to look at SMH. This is what most people own. This is what's going to drive the indexes. If you want to do some sort of analysis on, confirming new highs in SPY, you want to use SMH probably more than XSD. But if you want to see the health of the underlying market, right, and the health of the most important group of stocks in the market, semiconductors are the new Dr. Copper. They're the new railroad.
I would normally agree. And when it comes to consumer discretionary, for example, I do agree with that. But this one, again, I don't know the answer, but I have a hard time trying to convince myself. I'm very open-minded, but I'm thinking that this chart don't matter.
Semiconductor stocks, like software, are the kinds of stocks that you just want to own a giant basket of and put them away in a long-term account and own them for a really, really, really long time because they're the most important.
If you own this one and not the other one, you'd be bummed out right now, like hard.
No,
because you have Credo Technologies, whatever the fuck that is, instead of NVIDIA.
Well, here's the truth about how to do this. You build your own basket with this. There are so many good leadership stocks, small and large.
Jan already built it for you? Like, he literally cut the actual exposure in half because those three names are 80% of the market. This ETF, it's only 40. So now he cut it in half, added some of the other dumb little irrelevant ones.
No.
Isn't this the basket?
No, I'm going to build my own of all the best names.
All right.
You know that. Come on. We're running scans all day. We're going to build better baskets than anybody.
Just saying. Shout out to Jan. Hell of a job here, buddy.
And what you're bringing up about what Van Eck did is a whole different yet pertinent conversation to this. The U.S. stock market is going through something different than it's ever seen in the past. People will tell you, oh, look,
are you saying that this time is different?
Yeah, listen, people will come on and say, oh, it's been heavily concentrated before. Look back in the 1990s. Fine. Not like this. And it's not going away. These companies are only going to get bigger and bigger and bigger, and the concentration is only going to get worse. The Russell is with FTSE now. Yeah, FTSE Russell. They've already introduced a new capping methodology where they're not going to let their indexes get this overweight anything. I think they're capping everything at like 22. And that ceiling might just come down and down and down, lower and lower and lower. When I think about what are the things that can be bearish catalysts or headwinds for the Mag 7s, the biggest, best stocks, the ones that everyone owns in the future, like how do you stop these powerhouses? I think that's one way that nobody's talking about right now. You're restricting the demand. The reason why these companies are so good in many cases is because of their power in the indexes. They're always being bought. Up markets, down markets, good days, bad days. These stocks are constantly being bought because they're such index heavyweights. If you start to reduce across the board, and the spiders start doing this too, and Vanguard starts doing this too, and you start capping the exposure, they're not going to get that passive bid, that never-ending passive bid. That's what makes these stocks so good. So I think investors need to look out for that and pay attention to these headlines. Russell's
that's a whole can of worms. I don't want to open that can of worms.
We should talk about it with Balchunas next time.
Let's actually do that, please. Spencer, get it done. So two more things. Yep, that's Spencer. Crudo, fun fact there from B Wake, CRDO, also the largest weighting in IWM.
This is what happens. Yeah, when you get these runners. Yeah.
Yep. Shout out to B Wake, and then I go back to the chart because let's just close it out. We'll bring in Kenny. Shout out to Kenny Glick, by the way. Hell of a class on Saturday. We'll get to him in just a second. But let's bottom line it for you guys. So this is how I see it. So this is the market cap weighted version, just making a new all-time high. If you are in the camp that all of this winning going on and the world has never been a better place and stock markets all over the world are making new all-time highs, if that to you is an indication that we should be shorting stocks, right? Because there are people who believe that, then this should be front and center. Because if you are in the bear camp and you think the whole stock market's about to fall apart and all this winning is unsustainable and it's a house of cards and yield curves, book values, whatever nonsense you're feeding yourself, this needs to be front and center, because if the market is going to collapse, you're going to see a historic failed breakout in this ETF. Can I get a hell yeah there, Mr. Strazza?
Yeah, this is great.
And then if you go to the other one, then the shitty one, this is the equally weighted version.
Yeah.
If you are in the camp that the house of cards is going to all come down and this is a bear market and oh my God, Orange Julius and Trump is going to ruin everything. If you're one of those, then you're going to see a massive failed breakout here too. So
I like this.
And then if you're on the other side of the coin and you are a trend follower like us, you are aware of all of the winning that is taking place and you want to participate in said winning, then these things need to hold above those prior highs. So I don't care who you are. These charts need to be front and center. And I'll leave it at that. Am I wrong?
I love this. If you're someone who's just made money recently trading the waves, right, and you've done really well and you're looking for a place to protect those profits, but you don't want to leave the party too soon, right? This is a great risk level to just use for your broader exposure, what JC's showing you here with the potential failed breakout in SMH. I would add IGV to the list too. There are other indexes that look this way, and you just have a real nice tight level. And if we're above it, the broader market is probably going to continue to ramp higher. And if we're below it, probably means a corrective wave is underway.
Yeah, the IGV representing the software for those who are not ETF junkies like Mr. Strazza here that knows every ETF on top of his head. IGV represents the software group, which is like the semiconductor's cousins, right? So I was just at the Museum of Natural History, and all these dinosaurs are names I've never heard of. The Brontosaurus is not a Brontosaurus; it's some other shit. So I explained to the kids, like, oh, this is the Brontosaurus's cousin. Or like the T-Rex isn't the T-Rex, it's some other shit. So I was like, oh, this is T-Rex's cousin. That's how we,
That's great. Yeah.
That's how
that's
to
a
do
good
it.
one.
By the way, Museum of Natural History, what a great place. I mean, I've been there a bunch of times, so like it's not, but every time I'm there, I'm like, wow, this place is sick.
Who liked it more? You or the kids?
I don't know. I liked it a lot, I think. No, the kids loved it. They thought it was great. Oh, we'll talk about it at recess.
Add equal weight tech and equal weight NASDAQ to that failed breakout list too. You can make a list. If all of those growthy indexes start breaking below and printing these potential failed breakouts, I think you do want to be more cautious, at least towards your growth exposure.
Billy Cunningham, short Palantir up here. How about that? I'm not in it anymore. So I don't care. Let it go to zero. Not my problem.
Yeah, I don't really.
I mean, I own it in long-term portfolios, I guess. So I
can't, JC, I can't wait to buy an oversized position of Palantir back next time it draws down 50, 60, 70%. I can't wait. Like I look at it now and I'm like, oh, you're the same size as everything else. Oh, it's too bad. But it just has to be that way. I can't wait to buy it back 60% cheaper, 70% cheaper.
See, that's the problem with value investing here, you see? You're always sitting around waiting for shit.
And I said this too. We could go back. Spencer, we should check the tapes. We should go back and look for a time, probably in 2022, when Palantir's market cap was, I don't know, 30, 40 billion. And I was saying on this show, this is going to be $1 trillion company one day.
Steve was on this for a long time.
Steve nailed it. I know he sounds like one of these bitter guys that just missed it, but he's not one of those at all, which is why it's hilarious to me that he sounds that way. Because he was the first person I know who was all over this.
He didn't know better, yeah.
Love
all right, wait. All right, we're running late. Let's bring on Kenny, and we got Jeff in the wings.
It's been a long time coming. They ain't cuffing my clock, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up.
All right, Mr. Kenny Glick in the house.
Kenny, what's going on?
Happy to say nothing.
What do you mean nothing? It's a Monday morning. Surely something is going on.
Absolutely nothing. It's fantastic.
Is that true, or are you just being kind of silly?
No, there's nothing going on. I love it. I just got back from Cypress Hill, which was seems like about a minute ago. So I'm glad there's nothing going on right now.
So you saw Cypress Hill last night?
Cypress Hill, yeah.
Really?
They actually had to use the word evacuate. There was a massive lightning cloud rolling by, and it was something to watch. But the rains never came, but they couldn't perform with the lightning.
Where?
Asbury Park.
Wow.
Yeah, I'm old. I take my lawn chair. I go right outside. There's a little spot, and no need to pay for concerts anymore. So,
very nice.
Confession: I have never been to a concert in Asbury Park.
Oh, it's the greatest. Yeah.
I know. Everybody says that. It's such a bummer. I know.
Since I got puked on by some crazy drunk person at a Black Rose concert, it was just the show hadn't even got started. I'm like, why are you this drunk, lady? And I haven't gone back in yet. So And you know what? It's free. If it's free, it's for me. And they were great. The sound was pumping.
Dude, I gotta get up there because it's not far from Avalon. I'm down in Avalon all the time.
Yeah.
I gotta get a show. I gotta get to a show.
And let me tell you,
no, but
still brought it, man. They actually kicked ass. I mean, it was amazing.
Nice.
Yeah.
Tell me, is it really? I mean, look, I'm looking at the Dow right now, 0.0, Mr. Blutarski. We got S&P 500 futures 0.0, Nasdaq 100 0.0. You know, green and red, but 0.0s across the board. Fat, drunk, and stupid is no way to go through life, is how I learned it, Kenny.
Right. I pride myself. If there's nothing to do, then I don't do anything. So I'm going to wait. You know, again, today we predicted about 3 months ago that there would be some selling in the market, and we kind of have got to the point where the Qs I'm talking about in particular, they run out of steam a little bit, but no reason to panic, especially because there is no upside to the VIX or the UVXY. So if something changes today, like UVXY suddenly going up and the market breaking down, I will get involved in a short because it's on the cusp. But we've been on the cusp, it seems like, for 20 years. So it's never the big one, kids. Trust me.
So guys, if you're listening at home, this is a good lesson. First of all, you know, there's an old saying, I think it was Icon, one of these guys, the best trades I ever made was when I was sitting on my hands, right? So that's something to keep in mind. Also, it's August the 18th. So, you know, kids are about to go back to school, you know, last minute vacations. I know people in Europe and all over Latin America. I mean, I got people traveling. I see it all over. The market is kind of, you know, behaving in a kind of out to lunch sort of way, right? So the fact that you're not seeing anything is really not that surprising. But a shock, as I think it's the first time I've ever heard you say that specifically. Usually there's something, and if it's not a big company that's selling off, it's some little nothing or other that's and you know, there's always something. But is that nothingness that you're describing today, is that random, or do you think the fact that it's August the 18th has a little something to do with that?
Well, I think it actually has to do with August the 18th, and then some of these pump and dumps. You know, I don't want to get anybody trouble. The pump and dumps that usually last into the opens, into the regular session, have been getting dumped even before the open. So, you know, these $2 stocks that we talk about pre-market can get you in trouble. Sometimes it's more dangerous than trading, you know, $300 stocks because they'll drop 50% like that and, you know, rug pull you. But there is something I'm interested in. You guys know GDRX? They just had a little burst of news.
GDRX.
This is one of the stocks that were coming out of Andy Dufresne. It was, it's an interesting company, but, you know, it was a failed idea. But, you know, just like any of these $2 stocks, when there has some news that wakes it up, then it's interesting. That one just went across the radar. I just picked it off the scanner.
Yeah, so this is a $1.3 billion market capitalization, small cap in healthcare information services, which is one of the most heavily shorted areas in the market, by the way. So a lot of vulnerability in that space.
It was interesting. Interesting IPO, but then it, you know, kind of fell apart. But you know, stocks that go under 250 that come back interest me because when they come back above 250, they try to make a break to 5. So man, that one's on the radar.
Is that like a thing, like the $100 roll from 250 down up to 5?
Right. You know what else is in play? That's still in play. Wolf, WULF. That one has been on fire for the last couple of days. So it's still you know, ripping this morning. That's about it. You know, again, not a lot of earnings, but we're not done with earnings. And we have retail coming out, Home Depot, Walmart. You know, all the big box places are coming out this week. So there'll be plenty of activity. But to your point, when we don't have an advantage and you don't have something that's jumping out, then you just sit and wait, or, you know, again, prepare to be bored. Boring, you know, again, trading is supposed to be boring. You know, I try to make it fun and exciting, but it's a lot of redundancies and a lot of monotony. So
that's all. You know, the idea flow from you is great, but a lot of people really enjoy the camaraderie of, you know, trading with you throughout the day from all the feedback that we've gotten, you know.
Big part of it, yeah. And
that makes sense.
Speaking of camaraderie, we got our second podcast. Dawn and I filmed yesterday, so that'll be out. I'll send the link out this afternoon, people. I'll put it on my YouTube channel. So it's interesting. It's a guy. If you guys don't know, we're doing a podcast. Don Corleone from StockTwits, and we come from the opposite side of trading. He's more about the analyst and the fundamentals and crunching those numbers. I'm about, you know, all technicals and VWAP. So it's a pretty cool pairing. And it's a good discussion. So if you guys want to see it, I'll email you guys. I'll be on my list. And that's it. You know, again, I'm just...
Can you throw up to slide 2 before we let Kenny run, please?
Yeah, I just want to show you the cues before I leave because, again, this is, you know, I'm looking to see if there will be some selling. And if it's going to be selling, there's going to be some selling in the cues. We're still flirting with the lows from, you know, a couple of days ago. Here's 15 days worth of this market. Again, if we're going to pull back and it's not going to be the big one. I'm just looking for the 572.50 area. If that 572.50 area gives...
Are you showing the screen? Can you put it up?
Oh, I'm sorry. Here you go. Take a look at this. This is the only chart I'm concerned about right now. It's the cues. And again, I have an addiction problem to you know, shorting the cues or trying to short the cues. We are in a slight little downtrend. There's no denying. You know, we had a little blow off top, but again, the selling does not ever get intense. So that's why I'm watching that UVXY. If UVXY springs to life today, then we'll know that there are some sellers out there and possibly we'll get some, you know, aggressive shorts. But for now, we're just status quo right now. Market does not want to go down.
All right, Kenny, go get him.
All right. Cheers, my friends. Good luck. Be safe.
Kenny, great job on Saturday, by the way, too. Seriously.
Yeah, we're getting great feedback.
I appreciate it. Yeah, guys, the replay's up too. So yeah.
Oh. All right. And he's out. Just like that.
Yeah, Kenny had a class on Saturday where all his Hit the Bid members were at, hearing great things about it. I got to catch up on that.
I was there, and the beautiful thing of that class is like, as weird as it is to say, it's almost better when like Kenny's not distracted by like an open market, right? Where you can like at any given moment just throw a trade on. You can't throw a trade out on a Saturday. I mean, I guess you could on the Saturday, but nothing's going to happen. So there's no open orders to consider. There's no moving market to consider, and it's just static charts. And he can actually like really take a step back and explain things in much more detail without having to worry about positions and you know, a stock is gapping up or down or whatever, and there is none of that. So it was a really good class. The replay is up on the site. If you're a member of Hit the Bid, it's right there for you. If you're not, just go to hitthebid.com and join up, and you can get or use the link that was up on the screen, and you'll get access to that.
Well, I know we got Jeff Mackey, which I'm thrilled to speak to right now. But can you just throw up the chart, that slide 2? I wanted to reiterate to the folks at home the GoodRx Holdings, GDRX, that Kenny was just talking about. This is a healthcare information company, small cap, $1.3 billion in market capitalization, ripping this morning. This 4 level is a big one, guys. This 4 level is big right now in the pre-market. It is trading at 440. This sets up for a monster potential here. Can you refresh that? Throw up the new slide 2. You know, this sets up for a monster potential reversal here in GDRX. If we're above 4, and we are, from failed moves come very, very fast moves in the opposite direction. Man, this thing is setting up nice. So all eyes here for sure.
What was that? Was it earnings this morning? What was that? Why is it doing so? Why is it doing crazy things? It could. I think
it was earnings, but it's up 17%.
No, it's not. A collaboration with Novo Nordisk. Going to offer Ozempic and Wegovy.
Is that what it is?
Yeah. That's actually what it is.
All right. Let it be. Not a lot of short interest in this name, which is interesting, but a ton of short interest in the group. So from a thematic squeeze standpoint, it's setting up. All right.
Not Jeff. Kenny mentioned retail earnings, which start this week. So who better to bring on to talk about that is the man himself, Jeff Mackey. Because this is his domain. We are entering his domain. Everyone, warning you all.
Shall we?
Yeah.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Jeff Mackey, hello, sir.
Welcome to my domain.
It sounds like a little scary.
I kind of got the place to myself. It's a late August in the summer. Let's be honest. Not necessarily the fastest, most upbeat week of the year in Wall Street, except for me. This is one of my majors. I've told you 4 majors a year, and that's earnings season. And Walmart's the big daddy. That's the masters. If you get Walmart right, you pretty much have your finger on the pulse of the economy. You know what the hell's going on. So I've been getting ready. I've been training like Rocky all weekend.
Let's start right there. So is that true? So if you get Walmart right, you get the economy right, you get the consumer right. I hear from
they're doing $1.5 billion a day in the U.S.
1.5 billion a day.
A day in the U.S. And this is a crap quarter.
That's a fun fact.
Quarter. So yeah, I'm full of fun facts, baby. But they've got club stores. They've got their own so you get a little membership kicker that gives you a taste of Costco.
Sam's, right? Well, I'm a Sam's guy.
Right. And so there's two levels of this going on. They're going to talk about tariffs. They're going to say, you know what? We don't really give a crap because we're the biggest, most powerful organization in the world. We buy more junk and we're in the bow tie position of junk. And this is a world that runs on buying a bunch of crap. They know exactly how that flow is going. And so the tariffs won't matter to them, but so they'll downplay the effect on them, but they will tell you if they have to raise prices. And if they have to raise prices, that's a big inflationary sign. If they say, listen, inflation's coming, that kind of ends that debate as far as I'm concerned, because you can listen to polls. You can the polls don't mean crap. Listen to what people are doing, watch what they're doing. And what they're doing is shopping at Walmart. The numbers are actually pretty high expectations there. So, if I've always said, I was on a desert island, and you could only let me use kind of one source of economic information, just give me the Walmart annual statement, and I'm good.
The Walmart annual statement, and you're good.
I can figure it out from there. That's all the clue. It's a game of Sudoku, and I can just put the rest boxes together with pretty much just that.
So two things. First of all, shout out Sudoku. Isn't it Sudoku? Anyway.
I don't know. Probably. I'm not an international guy. Focus on the U.S. consumer.
So Standard & Poor's, the folks over there who sent us once a cease and desist letter for using young aristocrats. Fun fact, true story. We got a cease and desist from S&P Global to stop saying that. So shout out to the
Did they object to aristocrats? That's really
no. They have they own Dividend Aristocrats. Copyright or whatever. So we were infringing upon that. And I'm not trying to beef I'm a shareholder of S&P Global, but nevertheless, the good folks over at S&P, I love you guys. No beef, nothing but love. They claim that Walmart is a consumer staple, Mr. Jeff Mackey. I don't know that I believe that. Do you?
Kinda. I think we got to get rid of all the labels, JC. I've redone the labels because there are stocks that are consumer stocks that no one thinks of them as such. But you take Apple, they're all about iPhones. It's the first thing they pop up on the screen. Who's not using that? A bunch of institutional customers. Like that they are a consumer customer. Netflix, we've talked about that before. People will give that up. They'll pry it from the consumer's cold dead fingers. So what's a better tell of what the consumer's doing than how much they're buying Netflix? Where are they going out to eat? We work these stocks and we put them into their own kind of different categories. But to me, in an economy that 70% of GDP is made up of consumer spending, you got to parse these groups out a little bit and try to figure out the consumer is the straw that stirs the drink in terms of the entire economy. And so we need to put a little more thought into what's going on.
Stirs the drink in terms of the entire economy. Man, you have a way with words, Mr. Mackey.
I'm loquacious. I like to talk.
It's good stuff right there. Throw up what Mackey's talking about here. This is fantastic. I love, ladies and gentlemen, introducing the Mackey indexes. Mackey, this is fantastic. Look at this thing. Uber's a consumer staple now, according to you. Spotify, DraftKings is a consumer staple. I don't know, Mackey. Tell me more.
Hey, what? Cigarettes have been that's on the list. It's what people are jonesing for. What are people doing? How are they behaving? I care what the consumer is actually doing. I don't give a crap how these companies and industries were defined a zillion and 5 years ago. I mean, has transports outlived its usefulness? Probably. Not that concerned with trains anymore. Much more concerned with what Spotify's doing. I think that tells me
those
about
railroads
how
look
the
pretty good,
economy's
though,
going.
Mackey. They're looking pretty good, those railroads.
Yeah, they're looking fine. They're their
not
own
consumer
thing.
Stocks.
It's not consumer stocks. You see, that's a business to business type operation. But Chewy, what's more discretionary than how much you're spending on your pet? that deserves to be in there. Nintendo, that's a daily Joneson type of thing for an entire generation of people. That's on my list. You still have some of the traditional stuff. Philip Morris, I mean, the Zen packets. I want to know where the trends are going. I want to know what the consumer's doing, because that tells me about the health of the economy more so than the collapse of department stores weighing down on all these retail indexes when no one really gives a crap about department stores anymore. To name one example, to name just kind of one little thing out there, but it's you can call kind of Amazon. What's that? It's they make none of their profits from retail, but retail drives the entire motor that allows them to take over the rest of the world, including space. I guess a little bit of space, a little bit of suborbital Katy Perry space. It's a big company, is what I'm saying, but it's a consumer-driven name.
I see here you got Church and Dwight, you got Dick's Sporting Goods. So I see what you did there. You got the condoms and the dicks both in the Mackey Staples Index. I mean, the editorial writes itself.
I don't know, man. I'm just a humble man, and it's 6 a.m. out here. Maybe you're rolling a little earlier than I'm, not JC, but I hadn't thought of it that way. But I do think that Dick's missed a chance to rename itself the Dick Locker after the merger with Foot Locker, but that's a different topic.
Yeah, the Dick Locker. I don't know if that would play, but it is nice to see that Long Dick's continues to be better than Short Dick's.
Dick's is an amazing company. Actually, all bullshit aside, Dick's is absolutely a spectacular company and redefined itself. Quintessentially, it's where you go for sporting goods now, and that's got to be part of this. Are you telling me that that's not a good tell economically for how the American consumer is behaving? Because if we're cutting back on buying Johnny's new baseball bat, then I tell you what, we got a huge problem in the country.
Dude, Johnny's new baseball bat's getting expensive. Have you seen some of the prices of these bats lately?
Yes.
Man,
yes.
What a racket.
I know. I made my kid get into crew just so he could get out of those other sports, because, man, it's ridiculous. You should see it. People are taking out loans in Minnesota every year. Just about to put a kid in hockey gear is ungodly expensive. I just laugh at my friends. It's like, wow, how's that $250 hockey stick treating you there, buddy? That's a little crazy.
Oh, it's nothing.
That's a little nuts.
Because that's what they do. Jeff, I want to know what you're going to be talking about on Wednesday. For those who don't know, Wednesday Jeff is doing a live event, actually with JC, I believe, 2:00 Eastern time. The link is in the chat, and I will also throw it on the screen via a QR code. Right, where's my QR code? Right there on the top of the screen, the top left-hand corner. See that QR code? That's the link to sign up. It's a totally free event, but it's not going to be on YouTube. It'll be on stockmarkettv.com. So, Jeff, what are you going to be talking about?
We'll be setting the stage for kind of we'll go smaller picture to big, just because the news is going to be driving it so hard this week. Target is on Wednesday morning. I'm not going to be able to not talk about that. I grew up in Minnesota. My dad, Target needs a new CEO. Since they've gone public, they've had 5 guys not being part of the founding family that have been CEOs. It's a harder job to get than sort of coach at Alabama or Pope. My dad was one of the Popes back in 1987 to 94. He was running Target. So, they need a new exec. Their CEOs run out of time. That company's obviously running out of relevance, but that's another great tell. They report the day after Walmart. And kind of the magic here, JC, and where the alpha is putting together your theme. Okay, so Walmart's going to have a lot of power. They're an 800-pound gorilla. Target's got a lot of problems. They don't have a lot of juice with what's going on with their vendors. They don't have a lot of hand. The tariffs are going to hit them more, and they'll whine about the consumer more. And more to the point, they need a new CEO. If you're looking for a company that you want to trade this week, that's going to have a lot of variability in how they can report, I think it's Target. If they come out with just another miss, which they miss kind of every quarter now, and they don't have a plan for executive replacement, that company should go lower. And if it doesn't, that's going to be a tell, but it's going to be a real good indicator of where Christmas demand is.
So we've got the retail earnings starting now, but then they go for a few weeks, right? It's not just this week. It's this week, next week, and
we've got the big boxes this week: Home Depot, Lowe's, Target, Walmart. They always report roughly at the same time. We also have Viking. It's the upscale cruise guys. JC, I know JC's been strongly considering a cruise, but that's a great tell for the upper end. Viking, it's if you do cruise, JC, and I still say that you will. Viking's going to be one of the groups that you do it. That's a high-end luxury look that people don't really think about all that much. But, man, the cruise demand has been off the charts. so to speak. We use a little nautical term. It's a subtle reference, but it's there. But these companies have been incredible. And so, how bad can the economy be if anytime, it doesn't matter what the headline is, it doesn't matter who gets thrown off deck, a Disney trip, some kid got thrown off deck, his dad jumped in to save him, bookings were not impacted even a little bit. It's just like, is that cabin empty? Because our family's on the wait list. That they report this week. So I want to hear from them. I want to hear from Toll to get about housing. It's just a huge week.
Jeff, what is so special about this earnings season in particular? I mean, they're all big for you, but what's so big about this one?
We're going to see the tariffs start to bleed in. And so that's a real evolving story. In May, when they reported after the initial kind of, kerfuffle and delays, it was really one of, we'll see how this plays out. They pulled a bunch of product forward. Spencer, you and I have talked about the Halloween displays being on for sale at Home Depot a full 2 months earlier than they were last year. That's kind of bonkers. So they pulled a bunch of inventory forward. But what we're going to hear about, and it's going to tell the story on inflation, is how's it looking for the holiday goods? Because those were pulled forward, those were ordered months ago. They're going to take delivery kind of in one of these tariff holidays, these windows, these pauses, whatever they get, because that tariff bill is huge in terms of margins. And that story is going to start to unfold. Any incremental piece of information you can get on how the pricing at the consumer level is really going to play out at a place, it's between Walmart, Target, Home Depot, Costco, Amazon. You've got like 50% of consumer spending. So when you hear from those companies and they tell you what their pricing plan is, well, that tells you a lot about consumer and inflation. It doesn't tell you about services necessarily, but it does tell you quite a bit about what is really happening in inflation. And with so much attention being paid to all these incremental economic indicators that get adjusted enormously, famously, obviously, I would just, again, want to listen to the companies, hear what they have to say. And so the stocks get graded on how compelling a case they make. But in terms of the news information, if you're an economic guy and you're ignoring these reports, you're really just looking in the wrong place for your information.
All right.
Can you throw up that slide too quick, please, Mr. Spencer? Because, I mean, this is what I think of when I see cruise. So this is from a Carnival cruise. Go ahead. There it is. So this is from a Carnival cruise. So when I think cruise, this is what I think of. I think take everybody from Times Square and stick them on a boat, which is my worst nightmare. This is what I think of. And this was a recent video that went viral of a Carnival cruise. This is exactly what my worst nightmare is. So what Jeff is saying, correct me if I'm wrong, Jeff, is that these Viking cruises are mad bougie, and it's not like this at all. Is that true? Did we lose audio? Oh, we lost.
Jeff, can you hear us? Wait, I think he can.
I can.
Wait.
All
Jeff.
right.
Wait, no, Jeff.
Okay,
I think we have.
We're back. We're
back. Okay.
I saw what looked like an incredible cruise. Was that where the trip you're planning to take, JC? Because I'll have to work this out with you in terms of some.
I mean, that thing looks terrible. So that was a real Carnival cruise. I mean, that video went viral, and I mean, this is not Viking, right? All right, we'll get Jeff's audio.
I can't even get the audio right. I can't hear you again.
Oh, all right. It's the damn AirPods. All right, here's the bottom line. Wednesday at 2:00. That's all you need to know. Wednesday at 2:00. The QR code is on the screen. The link is in the chat and the description. Totally free event. StockMarketTV.com. JC and Jeff going through A, the earnings preview. B, the tariff trade war implications for all these companies. C, the previewing MACKE'S. He's got like a plethora, big word, plethora of brand new indexes that he has created because the other way, the old way is just wrong, right? So MACKE'S, he's redoing the whole retail consumer sector in his image, and it's the better way. So we're talking about all that and more Wednesday, 2 p.m. Be there, and it'll be good because Jeff is the man.
This is a great endorsement for Apple. Mackie, throw those things away. Garbage. Garbage. Use the strings. Use the strings like the old days.
I like
Get him
that. I
outta
like
here.
that. Get out of here.
Stick him in
Take
the
it easy,
bathroom.
boys.
All right. I mean, in Jeff's defense, it is 6 o'clock in the morning.
Get this
Yeah,
man.
but those ear pods are hot garbage. I went through 3 pairs. I lost one of the first ones. I think the second one stopped working. I don't know where my third one is. I'm boycotting the whole thing. I'm old school. I go like this, like it. And when I don't want to talk to somebody, I just put them in, and they know not to talk to me, even though I'm not listening to anything. It's great.
Yeah. What it is it's the plain obsolescence. I've had mine have conked out after like 4 months. It's like what is the point of that, right?
JC, are you saying that the AirPods are better than the studio earpieces?
The what?
He's saying the opposite, Steve. He's saying
The opposite. The AirPods are garbage.
Really?
Yeah. Clearly, you don't have a pair of AirPods.
No, I have AirPods. I have a lot of AirPods, but I have the studio earpieces too.
no,
No,
those
that's
are
not what I'm talking about.
those are good.
That's
We've
what
been over
Mackie needs, not
He needs a
that
microphone.
garbage AirPods.
He needs a microphone.
We got it.
Yeah. So listen, a couple thoughts. Dick's Sporting Goods literally owns sports retail in America. This is a massive market. And sometimes fundamental analysis is easy. This is an $18 billion company. If you're buying anything sports related and you live in a normal place, where are you going? You're going to Dick's. So 18 billion, I still think this company is ridiculously cheap. And if you go back to the 2022 bear market lows, you could have picked the stock up for 5-6 billion valuation. I think that's crazy. There's still a big runway here. You guys like that?
Here's my issue with like making the claim that like Dick's Sporting Goods is like the place to be. Maybe it is the place to be for sporting goods right now, but a few years ago,
No, that's not the story.
that's what.
Is that what you're
do you mean?
saying?
That's what you just said.
Yeah, they have a great online store too, is what I'm saying.
Okay. Well, my point was a few years ago, the narrative around Best Buy was that they had survived Amazon. Amazon came for them, and Best Buy said, no, we are surviving. People are buying stuff through us. And the stock reflected that, and then it didn't all of a sudden, right? That was the narrative for Best Buy like 5 years ago, is that they had somehow survived the onslaught of Amazon. Well, that was then, and look at the chart now. It looks totally, it's 180. It's a disaster. So
Amazon is not going to put out a sporting retailer, though, in the same way that they could put out a
who can say? Who can say, honestly, right? So
you got to go try on the shoes, Spencer. You don't have to try the hard drive. No,
I
mean, I get what you're saying.
but people use Best Buy as a showroom. So why not use Dick's as a showroom too? You know what I mean? I mean,
things are expensive there.
That's
Throw up slide 2 there. Take a look at this thing. Guess total market capitalization of Dick's Sporting Goods.
I just told you. I literally know.
You just said
Did you just say it? Oh,
it's 18.
18 billion.
change.
Yeah. It's lower than I thought. I would have thought higher, but I'm ignorant when it comes to that.
No, but that's my point, JC. Like at 5 or 6 billion a couple years ago, that's a ridiculous valuation for a company like this. Just walk into a store. It's heaven for sports enthusiasts.
Yeah, and I dare you to spend less than you thought you were going to spend.
Oh my god, dude, we were out of there.
Double, triple, easy, because you're going to be like, oh shit, I need new running shorts.
Let's
get our daughter another t-ball bat.
We thought we were going for tennis rackets. We spent $500 by the time we left, and I also bought.
What'd you get?
I almost bought a pair of Oakleys on the way out. So like, it's just one of those things. It's a great store. Bottom line, and 18 billion, I think it's still cheap. As for the cruise lines, I'm with you, JC. But Carnival, that's not even a conversation. Where like people go missing, it's just not safe on these ships. We still don't know where Amy Bradley is.
Oh my god!
It's been
I don't understand why you can't just pick a place and just go there. Why do you have to get back on a boat and go somewhere else? Like just pick a place and just go there.
All right.
It's been 27 years. We still don't know where Amy Bradley is. These are criminal organizations.
Who is Amy Bradley?
Amy Bradley is missing.
Stop it. Jason Perez, save us, please, God.
Bring him out. Bring him out.
Oh man.
Can you throw up slide 5, Jason? I want to leave you with this, and I got to hop. I got a meeting I got to get to. Appreciate all you guys. Jason Purrs. I see the Dow Jones Industrial Average making new all-time highs. This is the first new all-time high this year. Fun fact, on a weekly closing basis. Also, I believe on an intraday basis, also made a new all-time high last week. But nevertheless, on a weekly closing basis, new all-time high. First one since December the 4th. December the 4th also happens to be my father's birthday and Jay-Z's birthday. The rapper from Brooklyn on December the 4th. That was the last time that we had a new all-time high for the Dow. Just had one on Friday. You know, just saying. What does that mean to you, Jason, as a trend follower? Does that mean that the trend is down?
That means, yeah, we got to short everything and get out of the market. Obviously, a crash is coming soon. No, man, this is really bullish information. Hey, can we throw up slide 15 before you go, JC, real fast? Because this is also pertinent to what I'm going to talk about as well. So slide 15.
Yeah.
So same thing, you know, and we're seeing this over and over again across the board. You know, whatever you're looking at, you're seeing these new all-time highs. You're seeing things in uptrends. You're seeing people being very pessimistic about the market. I mean, this is our type of environment to just stay long and kind of sit on our hands and let this thing run. So I love when everybody hates something. Everybody hates emerging markets. Everybody hates the Dow. The Dow's old. Doesn't even matter. It's hitting all-time highs, both of them.
Got a lot of Taiwan semiconductor in this one, so keep that in mind. So this is emerging markets ex China, EMXC. All that Taiwan semi's probably not hurting the cause, but you got India in here, Vietnam, one of the best performing countries off the spring lows. So you're getting all that stuff ex China. You know, this is, you know, because China's like Notre Dame. You know, it's like it's an emerging market, but it's not, and it does its own thing, kind of. You know, so it's like in the ACC, but not in the ACC. You know, like Notre Dame. So,
yep.
You know, looking at the rest of emerging markets outside of China, you know, despite the over exposure to Taiwan semi, 14% of the entire ETF. That's big, but it's not too egregious, right?
Strazza says, "Don't ex China." I mean, look.
The answer is both. The answer is you do both.
Look at it all. And number one, love China. I'm obviously long China. Nothing wrong with that. K-Web looks great. Long K-Web as well. But I'm just taking information. You know, like that's what we do as traders, especially as you know, JC, like we're intermarket traders. Intermarket traders, I'm going to look at this. I'm going to look at China. I'm going to go through every single country and kind of wrap up what I'm seeing. So I think this can continue. Like, I don't see this international trade stopping. China looks great. Emerging markets going to South America, Southeast Asia, Europe looks great. That's something I haven't said in forever. So
Europe looks great. Remember when Fonz in that meeting a couple of weeks ago was like in his like Venezuelan accent was like Deutsche Bank is the best bank in the world. And we just all lose our shit laughing because like, you know, he was just being honest, but like, I don't think he knew just how funny it was when he said those words and we just all started losing our shit. I want to say one more thing about the emerging markets ex China. Strazza, not thrilled that we're having even this conversation. Ex China, the emerging markets making new all-time highs, as Jason so eloquently put it. Emerging markets with China are not.
I don't know why you would X such a great country like China.
Great country. Now these communists are great countries. All right, I'm out of here.
So Vietnam, believe it or not, is now officially up 75%. 75% from the April lows. We've been long dong all along. We've been long dong for years. Vietnam, probably the most exciting emerging market, frontier market, even they call it, growth story in the world. Probably get the most juice there because it comes with the highest degree of risk. Do you think, Jason, it's time to explore the opportunities in these incredibly high risk countries?
Absolutely. You know, and you know, I've been long a lot of these for a while, and I continue to stay long these things. I mean, it's going to be volatile, right? It's going to be rough to trade. If you're looking at ETFs, you compare it to the SPY, obviously more volatility, but there's a lot more upside to go. I think there's a lot more money to be made. I like the way you put it, being long the dong all along. You know, that's funny to me. But you know, if we continue to kind of see that, we see these emerging currencies. We see these moves in Europe. basically it's all weak dollar moves. As long as we see the dollar continue to weaken, I'm going to stay long these things. If the dollar starts to get really strong and we start to get above 100, that's a different situation. But I love the emerging market trades at the moment with China, ex-China, whatever it is. I want to stay long.
I love that you love them. I want to pivot before we go to the commodities markets. Energy futures, you just mentioned dollars. Should we still think of crude oil as a dollar trade as it has been pretty much this entire cycle? Crude oil's hitting its lowest level since really early June here today. And if you look at the derivatives, Jason, heating oil, same thing. I could call these little tactical tops that are printing here. And then gasoline looks absolutely terrible. So what's talk to me about energy real quick.
Yeah, so when I'm looking at energy, I like to think about it, as in the most lagging commodity in the cycle. It's always the one that's going to move last. And also, like when you look at cycles and you understand the way they work, it doesn't mean we just go in there and buy oil when it's in a downtrend. Oil's moving down, doesn't look good. It's holding. It's not in a situation where I'm like, hey, I really want to short this thing or I really want to be long it. I kind of want to just stay away from it till it breaks down or up. And same thing, like above 80 for oil, I'd be very bullish. At the moment, I'm just kind of sitting on my hands. XLE, let this thing get above 100, start to close up there. I'd get more bullish on it. These are the things that we have to continue to look for. Sure, you can find some strong stocks in that sector. There's a few of them. I know you found some. Very few people can kind of find those ones at the moment because there's not many of them. But as long as we can kind of find, hey, we're going to stay long these copper miners. Hey, we're going to stay long these gold miners. We're going to continue in those strong areas and then just wait on energy.
Yep. I think that's some sober advice. Last week, I had my brow raised at energy because XLE and energy stocks, broadly speaking, held up well. Last week, they were up on the week, and energy futures were not looking good. Looked like they were breaking down already. Today, it looks like energy stocks are catching lower and agreeing with that price action we were seeing last week. So just something I'm monitoring. And then copper, anything new there? I know that you've kind of been, holding steady, not worrying too much about the volatility that we've seen over the course of the past month or two. Still the case? Kind of just wait and see mode?
Yeah, like we talked about, we're looking at 425 for me is the major level for copper in the U.S. copper futures. All over the world, other copper markets didn't get hit like ours did. Ours was very news related. We saw that news breakout. I always talk about I hate news breakouts. Huge news breakout, Trump news comes out, and then more Trump news comes out right around Fed Day, and then it crashes right back down. Two news-driven breakouts. However, if you look all over and you look at these international copper miners at the moment, we're seeing some major moves. These things are holding up well. They're hitting new highs. You're looking at Hudbay. You're looking at BVN. You could go down the list. There's a bunch of them smaller down this cap scale that have the same type of price action. So we're continuing to see these new highs. And for me, I'm just saying, hey, like you don't see that type of scenario in a bear market where and the same thing with gold. Gold is holding up, consolidating sideways. Everybody's going, it's the end of gold. But why are the miners making new highs then? And why does silver look the way it does? And why does platinum and palladium, why are they holding up so well? And the answer is there's so much risk on in that market. Like it's risk on. I don't want to see gold just rip forever and be the leader. That doesn't tell me anything good about the gold and precious metals market.
That's right.
What really tells me the most, and most people would know this inherently, if I say this about Bitcoin, if I say Bitcoin hanging out up here between 100 and 120, that's fine as long as the alts are outperforming. Everybody would say, yeah, that makes perfect sense. But in the gold market and precious metals market, a lot of people don't know that or talk about that. So I like where precious metals are right now. I want to continue to stay long. I think they're up 70. GDX is up 70% this year already. Which is just mind-blowing. But once again, like you got to stay along the trends that are moving up, got to stay away from the ones that are moving down like oil. And then copper, I think, is the next one to really make a move. But you're looking at the if you're looking at the miners, those ones are looking great. Those ones are the ones where I think the money's going to be made going forward.
No, I like it, Jason. And been a couple comments in the chat as we're discussing this. Your hair looks great. I agree.
Thank you. I shaved the sides off a little bit,
Looking good, man.
And Spencer, you keep wearing these homeless man hoodies. We're gonna start calling you Bill Belichick on here.
This is from Uniqlo. This is a nice hoodie.
Yeah, but you are dressed like Bill Belichick. You understand that, right?
It was cold in my house this morning. I don't want to get into why, but it was cold in my house
Cold
this
and
morning.
wet.
So,
Awesome.
it's the whole thing.
Jason, any other thoughts before we hop off? Call it a day.
Yeah. I got chart 12, chart
Give it to
13, and let's we could just hop on those. We don't have to go through all of them, but chart 12,
Art
chart
on.
So this
Okay.
is one I wanted to talk about. Sam brought this to me. Great chart. And I was looking at it. I'm like thinking, okay, so I keep trying to say I'm bullish on gold, especially the miners, either way. If the Fed comes in, starts to cut rates, or if we have a disinflationary shock and they have to cut rates, if we have more inflation, I'm still bullish on gold. And the reason why is that real yield. So this is the real rate of return. Sorry, this is bond yields minus the inflation rate. So when we're looking at this, gold loves lower real yields. Now the top chart is inverted. So when this is if this moves up, so down in real yield rates, gold's gonna love that. Gold's gonna move higher. If this moves sideways, gold's gonna be fine. It's been doing fine this entire cycle. And I don't see a scenario where this moves lower or real yields move higher. Just because if inflation gets out of control, they're not going to be able to keep up with rates to that point. So I think gold is going to be the winner either way. Now, I want to move into the more risk-on areas into this market no matter what. I want to move into the silver miners. I want to move into the junior miners. I want to move into guys lying about holes in the ground type of stocks at the moment. Like that's really like the thing I'm thinking right now. The explorers, the things that everybody's going to go, okay, well, why would I even buy that company? They're barely even a company. Those are the things I think are going to move next. That's where the money's probably going to be made. And I think this thing's about to take off in a big way, especially if we see lower interest rates from the Fed. Like if the short end of the curve starts to go lower, man, this thing's going to take off. It's going to be even better. It's already been a 70% trade. I'm pretty sure. I was going to say it's the best trade of the year. I think it already is the best trade of the year in sector wise. But I think if we start to see that, this thing's going to take off like, nobody's ever seen.
I like where your head is at. And nobody's thinking this. For a while, I was in the camp like, that's enough from gold. Like, gold's ready to cool off. Let's rotate into some of the more cyclical, more economically sensitive commodities markets. And it's not coming. And gold continues to look good, while the rest of them, like we've talked about, energy and copper, continue to be sloppy or messy at best. And now you're talking about interest rates. Would you throw gold into like that same basket of like the 3 Bs that I do, biotechs, banks, builders, them going up kind of speaks to a bond market that has lower rates in the future. Would you think of gold in the same way as evidence for that theme?
In a sense, so gold is interesting because it can go up in lower interest rate environments, and mainly when there's a lower interest rate environment, we're looking at currency debasement or people worried about currency debasement, so they start
The intermarket landscape for gold, Jason, is the biggest freaking can of worms in the history of financial markets.
Well said.
Right? Like you can build a chart deck 500 charts deep of intermarket charts for gold. Like there are a million things that you could do, relationships that we've had throughout history, and it can get a little confusing.
Yeah, so if we're looking at, just let's look at the yield curve, for example. That's another one that could be, and that one to me is the clearest one to really understand where gold is heading. If we look at the yield curve and go, okay, well, we're starting to see the Fed start to lower interest rates in the front end of the curve, and then the long end of the curve continues to go higher. That's the most bullish thing for gold that we can see. And that's the main thing I see that can't change right now. I'd be very surprised to see that change. Like let's say the 30-year comes all the way down to 3% or something, like that would be the most surprising thing that could happen to this market at the moment. I still think if the 30-year starts to come down, the Fed will outperform that to the downside in the interest rates. If that's the type of environment we're in at the moment, I think the environment.
You're saying Treasury spreads keep rising.
Yes, for sure.
Even if rates come down, Treasury spreads are going higher.
Yes, and gold will love that, and real yields will work in that direction as well. So everything's kind of pushing to gold moving higher, But once again, I want to be in the more risk on parts of that market. Gold looks great. You know, I'm still long gold, but I'm not thinking it's going to be the outperformer. What I'm thinking is going to be the outperformer is the junior gold miners and the explorers.
Okay. Makes sense.
It's exciting times for the gold market. Exciting
And
times
silver
for the
too.
gold market. Yep.
And you want action in silver too.
Yep. Absolutely. Yep.
Yeah.
It's
Silver
an
is
exciting time for us too here over on the channel. And
Why?
because, well, Jason, first off, Jason, you got your weekly video today, right? For members of the Gold Rush?
Yes, we do. Yes, we do. So
You got your weekly video for members of the Gold Rush today. Kenny's going live at noon. We got Trevor Quest live at 1. We got a special live stream with Louie and JC today at 4 o'clock. That is going to be on the channel. It's going to be all about these crazy new all-time highs in crypto.
Yeah, but don't miss this. If you're into crypto and you're looking to get some skin in the game, this bull market, at least in the altcoins, hasn't even begun yet, right? People talk a lot about Bitcoin, the new all-time highs and all that, and yeah, Ethereum. There are a ton of options, a ton of alternatives, a ton of investment opportunities in the crypto space. And that's really what Louie's diving into now. I love what he's doing. He's going down the cap scale, out on the risk curve, looking for the really juicy stuff.
Yeah, basically what we realized on Friday was we had Louie on the show. We're like, we didn't even nearly scratch the surface. We have to do more of this. So we're doing this thing today. Right. It's going to be right here on the channel at 4 o'clock Eastern time, Stock Market TV, on YouTube, on our site, on Twitter. And that's going to really get into it, sort of all these breakouts happening. And then last but not least, if you are a member of AAC Premium, the next conference call is tonight, 8 o'clock Eastern time with JC and his charts. Nothing else.
Prime time.
Straight charts and JC in prime time. So busy day.
What's going to happen, Spencer, if we're doing these 8 o'clock Monday slots? Football's coming back soon. So I just worry.
Most of the calls they're not usually on a Monday. That's it's sort
you don't
of
want to compete with Monday Night Football.
You don't want to compete.
You know what I mean?
Monday Night Football. No.
Yeah, we'll
Tuesdays
compete with an FOMC presser, but like Monday Night Football, I don't know.
No, yeah,
I don't know if we want to go
do that. All right, let's get out of here. Thank you for watching, everyone. Thank you, Jason. Thank you, Kenya. Thank you, Jeff. Thank you, chat. As always, we'll be back tomorrow morning, same time, same place. We'll see you there. Go make some money, and YOLO responsibly.
Happy Monday, everybody. Thanks, Jason.
Yep. Thank you, guys. Later, Steve. Later, Spencer.
I can't take no loss. I don't even know what it costs.